Good evening. This is the stock analysis video for this coming week, in which I'm looking at two banking sector stocks. Now, the two banking sector stocks I'm looking at is as they're at a precarious point. The reason I'm saying that is one is which is Kotak Mahindra, which is first looking at, is on a shaky ground from quite some time, and the other was hyped up and everyone got an ass kicking from it. So now let us first look at Kotak and see what is going on inside the share. Now, when we look at Kotak only on a simple price basis without putting all the quant levels and everything, this stock has been trading in a box range from December 2020 with the monthly chart, which we can say 1670 is the support and 2070 to 2100 has been the box range resistance. It has not gotten out of this zone since a very long time. Then when we look at the weekly chart, we see the 20-day moving average and the 50-day moving average are acting as resistance, and the 20-day moving average is attempting a crossover to the downside. Now, if that were to occur, that naturally will be very, very bearish for the stock, as it would send the basically the equity towards the 200-day moving average line. But now when we add the quant levels, we see that we are at a precarious point, because if we are to break the support at 1720 on Kotak, then the next target is 1650 and 1560. If you look at 1560 is roughly also where the 200-day moving average is on the weekly chart. So how I'm going to look at this stock in the coming weeks, if we have a rise in the coming sessions towards the resistance level 1840 and I see any sort of weakness here, I will create a short to go down with the equity. The only reason I'm more towards the short side on Kotak Mahindra is because they've not been doing well on the news front, I would say. As a bank, okay, the fundamentals, everything are not bad, but what in the end of the day, most of the novice investors coming to the market are looking at is what's going on in the news cycle and everything. And that has been clearly now reflected in the charts. I said that they lost the Citibank deal to Axis Bank, which is a huge blow to Kotak Mahindra, I would say. So now any rise to 1840, it will first have to deal with the quant resistance at 1840, then it's got the 200-day moving average on the 4-hour chart at 1850, then it's got the 200-day moving average resistance at 1860. So for it to break above this will be a huge task, and I believe it will be an ideal shot at this point. But if it manages to break above this, then there's nothing that will stop it from reaching 1985, and even I will then share targets for beyond, because it will be a very positive move by the stock. Thus, I believe the current move, if it occurs to the upside as we are seeing in the 4-hour chart, will be more of a trap by the bears being laid, that those guys who will buy, if they do not exit here, they're taken out to the bottom. So I would prefer to trade this via hedged options or option sells, so as to either earn from the decay, or if you are option buyer and you have hedged it, you won't get slaughtered if you're wrong and by the decay to that extent. Now, the second stock I'm looking at is Cfc Bank. Now, the day the Cfc Bank merger was announced, I remember on Twitter a lot of traders was saying that this is the best thing that has ever happened to Cfc Bank. This is glorious. This is whatever rubbish they wanted to say. Now, I tweeted on that day that I believe Cfc Bank will continue growing, as it's a major bank in India, but it will continue growing at the pace it's currently growing at. It's not going to have some exponential increase in growth, as simply the facts on the ground do not support that theory. Yes, you can wish for it, but if wishful thinking brought everything, then that would be, everyone would be billionaires. So we can see that's exactly what happened, as the stock rose, and in fact once it had reached around here, I shared many screenshots of me shorting the equity in that day and in the coming sessions up till around here when I stopped shorting it as my mind got taken by another stock. So now HFC has reached an interesting point, I would say. The reason I'm covering it is on Friday it had a close with a doji candle, and the only positive factor I see in this candle's close is that basically the candle managed to have a close above the gap up support which I've highlighted here. If it had broken that gap up support at the close, then that would be a very worrying sign. The second positive thing I see is that the volume of that candle was not bad. It was equaling the bearish volume which we saw in the previous day, so that is a positive sign. Now, but how will I trade HFC Bank in the coming trading sessions? Now, if HFC Bank were to manage to hold this gap up zone, I will not go long in the index, in the stock until it breaks this resistance level at ₹1540, because that is a major hurdle for it. If it breaks this, then I'll consider another long in the stock, but it will be long at about 50% of my normal volume which I used to go long, as we'll be climbing against a lot of stiff resistance. On the other hand, if HFC Bank were to give up this basically support zone of the gap up, then I'll expect it to fall to 1470, as I don't believe the 200 moving average will be able to do much for it as of now. If it falls to 1470 and it breaks that, then 1435 is the next support. Technically, I am not going to touch it as long as it stays between here, this 5% zone, on a positional basis. This zone for me is only intraday trading. HFC Bank, which I believe it will give us a lot of good moves. So anyone who is doing intraday trading, I would suggest you open HFC Bank and keep it on one of your charts, as it will give you a lot of moves within this zone. However, positionally within this zone, I don't want to touch it, as it will be, you're touching a hot cake and which you just come out of the oven and expecting it not to burn your fingers. If it breaks this zone, then I'll short it up to 1435, which will be a small short, and if it breaks the zone, I'll provide more targets to the downside. If it breaks 1540, we'll be heading back towards the resistance at 1690, but don't expect that to be a straight up move. It will be a very slow jagged up move. Thank you for watching the video, and do like and subscribe to the channel, and also do click the notification bell so you get alerted for the next videos like tomorrow morning's pre-market.